Big economic news today with the inflation number. Let's get some analysis. Joining me live in the studio is EY, Oceania Chief Economist Cherelle Murphy. Cherelle, great to see you. What do you make of the number? Give us your read.
Thanks, Kieran. Yeah, great number. Really, really welcome, obviously, should be welcomed by all of us, and particularly the Reserve Bank. We've finally got underlying inflation kind of coming back down a little bit more than they thought. So 3.2 versus 3.4, which is the forecast for the year to the December quarter. Of course, the headline number coming down as well, but we knew that because of all the rebates and the government help that we've been enjoying. So it's a really positive outcome. The markets have obviously gotten pretty excited about the prospect of a rate cut as soon as the February meeting on the 18th of February. And I've got to say it is definitely the strongest signal that we've seen yet that the RBA can start with those rate cuts.
And as you said, they had forecasts 3.4% underlying inflation.
Correct.
For that quarter. It's come in lower than that. In fact, it's the lowest in more than 3 years.
It is, yeah. So that peak, obviously, we're well past it. Things are moderating. And because they're moderating just that little bit faster than the RBA thought, I think this is what the markets are getting pretty excited about.
Yeah, and in terms of the timing, so there's a February 18 RBA board meeting. There's one on April 1st as well, with a scheduled budget March 25. There's a lot of politics around this too, given the election timing. We don't know when the Prime Minister will call it, but there are some options, and potentially two opportunities for the RBA to reduce rates before we go to the polls.
It's certainly possible now. I think clearly the RBA are going to be looking at these numbers in conjunction with everything else that they're seeing across the economy. So, I guess working against the possibility of a rate cut is the stronger labour market. We've still got that kind of ongoing risk of higher inflation from the Trump administration's tariffs. We've got productivity numbers are really low. That's not great for inflation. And the services numbers in these data were not great. So you've still got services inflation running at 4.3%. So, the RBA has to kind of consider all of that. Now, I don't necessarily think that means it stops them from putting in a rate cut in February, but it's not a done deal. April, again, they'll have a bit more information, and that might just clarify some of those sort of, details that they're not quite sure about. But yeah, there's two chances there before the, the D-Day, I guess, of May.
The D-Day. And there's an argument as well, as you know, you watch it more closely than anyone really, in terms of the unemployment rate. You touched on it, the labour force. It's a very strong unemployment rate at the moment in terms of how low it is.
Correct.
Does the RBA need to reconsider the level at which it believes it can cut rates? Because at the moment, I think they say it's 4.5%.
Yeah.
We're closer to 4%.
Yeah, acknowledging that they don't actually know, but yeah, they potentially could be reassessing that to think, well, if we can get inflation down and keep the unemployment rate, somewhere lower than 4.5%, that is great outcome, and that would cause us to maybe pull the trigger.
And why is that happening? Is it because wages aren't flying out of control? Is that the main reason?
Yeah, wages are very well behaved at the moment, although I would counter that with the fact that it's not just wages that matters, but what we call unit labour costs. So it's sort of like wages adjusted for productivity, and they're not as good. They don't get as much focus, but in some ways they are more important for the Reserve Bank when they're thinking about the pressures here. So again, it's one of the reasons that I'm not saying that a February rate cut is a done deal, because we do have that strong labour market, we do have poor productivity growth numbers, and that's something that would be, working in the opposite direction.
But given this number, it is data over up until Christmas. It's the December quarter. Markets pricing in now 3/4 of it. I think you said it was over 75% chance.
Yeah.
Where would you put it?
Look, I think,
have you got odds in mind as to where you would have it?
I think the markets are probably about right on this, actually, in the sense that it's looking quite likely, but just not 100% sure. So there's this number really kind of makes a difference. It does make a difference to the judgment of where the RBA is at. Markets have obviously moved to price that, and that's what they should be doing. But it's not a done deal, and so they're not quite at 100% yet. So I think it's about right.
Okay. Great to get your insights, Cherelle Murphy from EY, Chief Economist, Oceania. Thanks.
Thank you, Kieran.